ومن أحسن قولا ممن دعا إلى الله وعمل صالحا وقال إنني من المسلمين.
Assalamu alaikum wa rahmatullahi wa barakatuhu. Rabbi shrah li sadri wa yassir li amri wahlul uqdatam min lisani yafqahu qawli. COVID-19 is an unprecedented event, and none of us could have ever imagined that it would hit us like this. Individuals as well as businesses have been affected by it. Small businesses, which were considered the backbone of any economy, are either shut down or their revenue has decreased immensely. Individuals on the other side, millions of individuals have been laid off. According to the US Department of Labor, around 22 million people have filed for unemployment in this month. In all this catastrophe, the US government and Treasury has been very actively infusing money in the economy in order to provide a lifeline to these individuals and businesses. Around $2.2 trillion were floated in the economy. CARES Act was signed by President Donald Trump on March 27th, 2020. According to this act, a lot of reliefs were given to the individuals as well as businesses. And that's what mainly my topic of discussion is for today, because we all are affected by this and we all should understand that what reliefs are available for us in this act. So we are going to be discussing, let me just start my slides. We are going to be discussing what individuals and business reliefs are present for us. So first, I'm going to explain you the individual point of view or individual reliefs that are present, and then we move on to the business. So for individuals, first of all, I want to say that as these rulings are changing constantly, so I want to make sure that this presentation is subject to change based on further guidance from the US Treasury and the SBA. So let's move on to our discussion topics, which is individual tax relief first, and then the next 3 points relate to business tax reliefs. So for individuals, we already know that the filing deadline has been extended from April 15th to July 15th, and you also have time to pay your tax. But make sure you file your taxes by July 15th because there's no extension after that, and also you pay your tax by July 15th. Another thing is that generally you have to pay your estimated taxes quarterly, and the first estimated quarter deadline was April 15th. That also is extended to July 15th. So by July 15th, you have to do the estimates for your first quarter. That was the first relief. The second one is the economic impact payments, which most of us might have received it in our accounts, but still it's still not clear like what's happening. There's a new tool that IRS has introduced, which I've put it in the slides, which is www.irs.gov/EIP. And you can go in there and see exactly where, if you have not yet received your payments. So let me tell you, like the payments are for anyone who is a US citizen or a green card holder, but it has some income limits. So if your AGI, if you're a married filing joint couple and your AGI is less than 150,000, you are going to get the full 1,200 per person. But if your AGI goes above 150,000, there's a phase out that starts. And at 199,000, married filing joint couple will not get anything. For kids, if you have dependents which are under age of 17, they will get $500. But if you have elderly parents who you claim on your tax return as dependents, they are not going to get anything because they are your dependents and they're not under 17. But let me explain you that if those elderly parents are not your dependents and they are getting some social security income, they don't have to do anything if their filing requirement is less. their payments will come directly in their account where they get their Social Security payments. So I have created, I found this very informational table to make you understand that if you have a filing requirement and you have already filed your return and you have a refund in that return, that means that the IRS already has your direct deposit information if you have put your bank account in your tax return. So you don't have to do anything. You will get your payments through the same bank. Or if you have not you didn't put your direct deposit information, you can put that information in this use get my payment tool that is on irs.gov. That's the new tool. So, but if you have already filed your return, but you did not have a refund, meaning that you owed some money, that means the IRS is not going to be using the same bank account which you paid for your taxes. You need to put that information in that Get My Payment tool to get your funds in a bank. Otherwise, you will receive a check, and the checks might go a little late. Secondly, that sometimes people's income are less than the filing threshold. What about them? If they are a Social Security recipient, they don't have to do anything. They will already get their funds in the same bank. But if they don't have Social Security and they don't file their returns, they have to use the non-filer tool on irs.gov. Otherwise, they will not be able to receive the payment because their information is not there in the system. So you can go through these slides if you have any further questions on that. Okay, so we talked about two things right now. The third thing is that the CARES Act expanded the unemployment benefits. So now the unemployment is for self-employed people and independent contractors as well. The CARES Act actually put in $250 billion in this program, in the unemployment program, to make it available for these people which were not previously eligible. So we talked about three things now. The fourth thing is the retirement plan distribution relief, the required minimum distribution suspended, and the charitable contributions, which I'm going to be discussing in the next slide. So let's move on to the retirement plan distributions. Now, we all know that generally, if we take money out of our IRA or 401k, if we are less than 59 and a half year of age, we get a 10% penalty, but that penalty is waived for this year. If you take money out because of some coronavirus related, it's called coronavirus related distributions, and I'm going to explain you what exactly that means. But if you take money out from your 401k or from your IRA this year, you are not going to get that penalty. Plus, let's first understand what is a coronavirus related distribution. So for example, the distribution is up to $100,000 that you can take out from your 401k in this tax year. For example, in any of the situation that has struck you, for example, you're diagnosed with a COVID-19, or your spouse or dependent is diagnosed with COVID-19. Many people will not fall maybe in this category, but the third one, who experiences adverse financial consequences as a result of COVID-19, which most of us might have, reduced work hours, or you're quarantined or laid off. So, and reduced or closed hours of business. So if any of this has you've been affected with any of this, you can take money out of your 401k and you're not going to get that 10% penalty. So what exactly you do? For example, you took money 75,000 out of your 401k. Let's go back and see. So they're again giving you an option that you do not have to take the whole 75,000 in your income in your tax return. You can do it ratably over the next 3 years, meaning 25,000 you can include in 2020, then 25,000 in 2021, and then 25,000 in the next year. Okay, so that is basically what this is all about, the coronavirus related distribution. And also we need to understand a very important point here is that if your situation gets better by next year, for example, and you decide that whatever 75,000 you took out from your 401k, you want to put it back, you can do that. So the 60-day rollover, which was already there in this program, has now been changed, and now you have 3 years to recontribute the money back, and then you won't be taxed at all. So for example, you took 75,000 out and you took 25,000 income in 25,000 income in 2020, and then 2021 you decide to put the money back, all 75,000. So you're allowed to do that, and you can amend your tax return for that 25,000 income you have filed already. 25,000 that you've already took as income, you can put that. Let me check something if you guys are able to see the slides. Okay. Can you see the slide? And let me just. Let me just confirm. I apologize.
Yes, sister.
Okay. Okay. So now we are, I hope you can see the slides now. So I didn't go that much further into the program. So I was just talking about the coronavirus related distributions that you can include it in your income over the next 3 years. And if you decide that you are able to put the money back in the 401k, you are allowed to do that, and then amend your return for the income that you already took on your tax return. So that was a second point. Now let's move on to the another relief that is available for our elderly who are more than 70 and a half year of age. So if you in 2019 you were more than 70 and a half year of age, you know, all are aware that you have to take a required minimum distributions from your 401k by April 1st of 2020. If you do not do that, there is a huge penalty for that. But that is also waived for this year. That means it's applicable to both first-time individuals whose beginning date was April 1st, and to other required minimum distribution that required minimum distribution that till December 31st. Were not due till December 31st. So because right now the markets are down, because right now the markets are down. If you want to take a minimum distribution, you have to sell your investments at a very low price. Investments at a very low price. That is one of the reliefs that is present. That is one of the reliefs that is present. That you do not need to do or required minimum. So this is applicable to individuals. So this is applicable as a beneficiary of the IRA or of the IRA or also a plan participant. Okay. Now another relief that is there in the act is about the charitable contributions. Generally, if I'm claiming standard deductions on my tax return, I do not on my tax return. I do not have a charitable deduction because I take the standard deduction because I take the standard. They have, but for 2020 they have, although it's only 300 that you can take a cash contribution, charitable contribution of $300 contribution in 2020, even if you're taking standard deductions. Even if there will be some changes in the form. So there will be some changes in the form. So the deduction is not available for donor advice contributions to donor advice fund or supporting organizations. Then if there are some people who are very high donations, generally if someone has an income, for example, if someone has an income of 100,000 and they are giving charity, for example, if there's someone, they only get to deduct 60% of that donation. But for 2020, donation, if we have some generous people in the community, they will be able to get the whole 100% of the deduction. It is no longer 60% of AGI for this year. So these were the reliefs for individuals. I think we missed that slide which I was talking about. I think you guys were not able to see it. So let me just tell you. So this is the economic impact payments that you were okay. So I was talking about this, that if you have a filing requirement and you have already filed your return and you didn't get a refund but you owed money, then you need to put this information to get your refund. So we were done with the individual reliefs. Now let's move on to the business reliefs. So the business reliefs, the first one is the economic injury disaster loan. The economic injury disaster loan was already there for a long time, but it's just that the CARES Act has put in another $10 billion. Another $10 billion into this program. And in order to be eligible for this loan, you have to show that you have your business have suffered substantial economic injury as a result of COVID-19. So for what I could tell my clients is that in order to show that, maybe you need to have some pro forma financial statements showing that what your revenue and expenses are right now with COVID-19 and what your revenue and expenses would have been if the situation would not have been like this in normal situation. So this will show the SBA that what is the amount of injury, that economic injury that your business have suffered. So the covered period for this loan is from January 31st to December 31st, 2020. Okay, so the business must be in operation as of January 31st, 2020. It is automatically, if you have fewer than 500 employees, you can get the loan. But if you have more than 500 employees, there are some other criterias. It is also private non-profits are also part of this program. No personal guarantees are required for up to $200,000, and borrowers do not have to prove that they could not get credit anywhere else. So what is the maximum loan amount that you can get, which is 2 million, and the term is 30 years for this loan, and it is not cheap money, meaning you can see that the interest rate on the loan is 3.75 for businesses, whereas 2.75 for nonprofits. The payment is deferred for 1 year, and the interest keep on accruing. So you can defer the payment for 1 year. This is an actual loan, and you might have to give collaterals in the assets of your business if the loan is for more than $25,000, but no collaterals for loan up to 25,000. Okay, so the most interesting part of this loan is the forgivable part. This is the only free money in this loan. That is, the applicants who do not have any money, or businesses who do not have any money in their bank account, could have received $10,000 in emergency grant. And it says within 3 years, 3 days of the application, but it seems really ambitious. I have not come across anyone who got the money in within 3 days. But this is a free money. You have no obligation to repay the grant. And if you secure the PPP loan, which we are going to be talking about next, then this 10,000 grant will be subtracted from in the EIDL. This is actually the only free money, and the other than that, it's a real loan, but it's very flexible, much flexible than the PPP, because it can be used for many things. It can be used for payroll, for rent. The difference in this and the PPP is that for EIDL can be used for your repayment of your principal amount of your debt, whereas PPP cannot be used for the principal amount. But the restrictions in EIDL is that you cannot go ahead and do something which you were not already doing in your business, like expand your business operations, or buy some assets which are not related, or pay cash dividends or bonuses to your owners. So, or refinance long-term debt. So this is, you cannot do that with EIDL, but you can use it for your regular working capital, operating expenses needs. So you can apply for the EIDL, although the funds have already been used up, which were put in for this program. But I think just yesterday, a bill was passed, and fundings were given to PPP as well as this program. You can apply directly with SBA at the link that I provided it. And these are the list of documents. It's a very small application, very small, but then you have to submit it later, all the documents. Plus, the affiliate rules apply to this loan as well as the PPP loan, which I'm going to talk about. Can you see the slides now? Hello? Okay. Okay. Okay, so now we were on the PPP program. Okay, the this is a not a normal kind of loan because it is a lot of things depend on the borrower assertions. The lender is not responsible to do the verification or anything like that. The borrower is the one who's responsible. Then the borrower will sign all the documents. That person has to be very careful, and affiliate rules apply. So you need to make sure that everything is correct in your application. Otherwise, they haven't yet decided on the penalties if it's not correct. So how much is the loan amount? Let's understand that. It is $10 million or 2.5%, 2.5 times the average monthly payroll, whichever is less. And I have an example here to make you understand that. So what exactly are the terms of the PPP loan? The loans are 100% guaranteed by SBA, and the program funding level is 349 billion. But as I said just yesterday, some more funds were put in this program. The loans are on first come, first serve basis, only one loan per borrower, and it's no collateral, no personal guarantee is required for this loan. And you can see the interest rate is very low. It's like quite less. The loan term is 2 years and the payment is deferred for 6 months, but interest continues to accrue. And the loan is forgivable. And that's what I'm going to discuss in the next slide, that if you use it in the correct way and you are able to satisfy the criterias, the two more criterias, the loan is forgivable. So the program started on April 3rd, and most of the funding initial has already been taken up. And the sole proprietor started on April 10th. So who is eligible to apply for this loan? So anyone, any business, nonprofits, tribal businesses who are in operations on February 15th of 2020 and have 500 or fewer employees are automatically eligible. But if you have more than 500, there are some other criteria which I'm not going to go in here. It covers sole proprietor, independent contractors, self-employed people that were in operation on February 15th of 2020. They can also apply for this loan, which started from April 10th. Let's go in the key terms. It has no borrower fees. The borrower do not have to pay the fees or anything to the lender. The covered period of this loan is from February 15th to June 30th. That means this is the period where you can get the loan till June 30th. But then once you get the loan, for example, you got the loan on May 1st, for example, the forgiveness period will start 8 weeks after the loan is made, after the funds are available to you. So if you got the funds on May 1st, your forgiveness period start counting from May 1st to June 1st to July 1st. So that is 8 weeks after the loan is made. So now the individuals who are employed, that on which you will get the loan, or based on which you will be getting the forgivable amount, includes full-time as well as part-time employees. So this is very important to understand that when we talk about employees in the next slide, it will include both. The affiliation rules apply, meaning that if you are an owner in one company and you have control in other companies, you have to you have to apply for each company separately, but you need to have a reference or an attached addendum in your application referring to those companies that you are affiliated with. And this is applicable in PPP as well as in SBA. And it is dangerous, like it's quite serious, because the lender is basically going to rely on the borrower certifications. And that's why you need to really be careful in doing these applications. So what qualifies as a payroll cost? It will include the salary, wages, commissions, but the salary wages is only for employees less than 100,000 per employee. So if you have employees which are more than 100,000, they are not going to be part of this program. So, and also it will include any payments that you're going to be making them for vacation, for parent leave, for the leave, and also if you are paying them some health insurance or retirement benefits, that also included in the payroll cost, and also the payment of state and local taxes. But the employees have to be resident in residing in the US. If they are not residing in the US, they are not going to be part of this program. So let's go to an example, because I think an example is the best way to make people understand. The annual payroll cost, for example, if there's a company, annual payroll cost is in the last 12 months, 1.5 million is what your annual payroll cost was. And then you have only 3 employees whose income is 100,000, for example. So these 3 employees are not part of the program. So if you look at the calculate option that I've given here, so the total eligible payroll right now for you will be, for this program, will be 1.5 million minus 300,000, 1.2 million. That is what your eligible payroll is. So you need to remove the employees, which are more than 100,000. So the average monthly payroll is 100,000 for you. So what will be your PPP loan? The PPP loan, as I explained you before, it's 2.5 times your average monthly payroll, which is 250,000. That will be the amount of your payroll PPP loan. So now once I receive the loan, what do I do with it? So you can use it for all these things, but then 75% of the loan that you receive have to be used for payroll. Other than payroll, you can use 25%. If you want it forgiven, you can use 25% only for interest on your mortgage obligations. No principal payments allowed. You can use it for your rent. You can use it for your utilities. Make sure you keep records of your utility bills, your rent payments, and your mortgage payments, because you're the one who will be giving the assertions for your forgivable amount. So you need to keep a record of all this. So do independent contractors count as employees for PPP loan? No, they don't. They don't count because the independent contractor can apply for PPP loan on their own, because we just mentioned that the self-employed people, their applications went on live from April 10th. So they can apply on their own, and you cannot include them as an employee, the independent contractors. Okay, so the independent contractors can apply on their own, and they need to also show if they're paying any wages and what is their self-employment income. This is what they need, all this information to do it, the application on their own. Now let's move on to the most important thing, which most of us are interested to understand, and there's so much confusion in the laws right now, and they might change. Right now, the forgiveness period will start 8 weeks after you are funded with the PPP loan. And the eligible forgiveness amount really is a multi-step calculation. It depends on how you're using the funds. So you have to use 75% for payroll and 25% for only for your mortgage interest, rent, and utilities in that forgiveness period. Not only that, there are 2 more criterias. So we are going to go there, and we will also go through an example. So you need to make sure that your employees are intact, meaning that you do not fire employees in that forgiveness period. So if you want to keep the funds and make them all forgivable, then you need to make sure that your employee headcount is not less than what it was before you got the loan. So the average full-time employee equivalent during the forgiveness period, which is 8 periods, this is the forgiveness amount reduces with a ratio, which I'm going to just go in the next slide. Let's go through this example. For example, a borrower has got 50,000 of PPP loan for payroll only. I'm not going into details for anything else right now. So for example, the borrower has 8 employees that earned $5,000 during that 8-week period when you got the loan, and from the day you got the loan, the 8-week period starts, and you have 8 employees there. So according to this, your forgivable amount should be 40,000 out of the 50,000, because 10,000 you are using to prepay the debt. You're not using for interest, but you're using to prepay the debt. And I just mentioned that the principal payments are not allowed. So your forgivable amount for this loan should be 40,000. But then let's see what happens. As I said, that there are two more criterias. So for example, before you got the loan, the measurement period is something which is not really clear. So for example, from January 1st to February 15th, or maybe in the first quarter, you had 10 employees. But now you have just 8 employees. So that means that your employee headcount went down, and then your forgivable amount will not be 40,000. So let's see, the forgivable amount 40,000 is going to be reduced with that ratio. So if I divide this by 10, because you had 10 employees in the measurement period and 8 employees right now in the forgivable period, so only 32,000 is your forgivable amount, and you still need to pay back 18,000. 10,000 was in any case ineligible because it was used to prepay, but 40,000, which was allowed, but you no longer can take the full forgivable amount. You can only take 32,000 out of that. So you owe 18,000 in the loan, and plus FICA as well as FUTA tax is what you need to pay. So I hope this makes things clear, but I can answer any questions later on if you have. So in addition to that, there are two more rules. There are two more things that we need to understand, that not just we need to keep our employees' number intact, but also the employee wages or the salary. For example, in the first quarter, you were paying your employee from January 1st to March 31st, you were paying your employee in the first quarter 20,000, for example. And now in the forgiveness, in the second quarter, you have reduced your employee's salary more than 25%. So then your forgivable amount will be affected by that. So forgiveness amount is also reduced to the extent the decrease in the salary during the covered period is greater than 25% of their salary, which was in the first quarter of 2020. So just need to be careful for that. Now, relief from the forgiveness reduction, if the borrower rehires the employees and or makes up for the wage reduction by June 30th, you might get some relief from the forgiveness reduction, but this rule is still not very clear. Okay. So we discussed for the business, we discussed the EI, economic injury disaster loan, then we discussed the PPP. Now we are going to move to the employment tax relief that is available. So the first one is a social security tax deferral. So and if you already have a PPP loan forgiven, then you cannot use this credit, or you cannot use this relief. So in this, if you're an eligible employer, and also you're a self-employed person, and you are generally you have to pay the employer portion of a social security tax on your employees' wages, you are allowed to defer that. You can defer that. 50% deferral are required to be deposited by December 31st of 2021, and 50% of the deferred tax are required to be deposited by December 31st of 2022. And this will cover the period from March 27 to December 31st. That means if you have employees to whom you paid wages between March 27th and December 31st, and you do not have any PPP loan forgiven, you can that 7.6, so Social Security is 6.2% of the salary that you give to your employees. You can defer that and not pay it for this amount of 50% for till December 2021, and then 50% for December 31st, 2022. That was one of the reliefs. The other relief from employment perspective is the employee retention credit. Now, this was established by the CARES Act, that if you have employees whom you're paying wages in these times, and you can see that the period that covers is from March 13, 2020 to December 31st, 2020. That means if you are paying your employees in this period, then 50% of the qualified wages that you pay to your employees, you can get a dollar for dollar credit for that amount. So for example, if you pay 10,000 to your employees, you are able to get 5,000 credit, 50% credit. And how are you going to get the credit? I have an example here, but let me just tell you who are the eligible employers in this program. Eligible employer for employee retention credit can be any employer that carries on trade or business during 2020 and have fully or partially suspended operations due to orders from the government related to COVID-19, or has experienced a significant decline in their gross receipts during the calendar quarter, which I think many employers can qualify for this. But it does not include people who have received the PPP loan or self-employed individual or government employers. So let's look at an example here. Now, an eligible employer, which we just talked about, that who is an eligible employer, can be anyone whose gross receipt has suffered due to the COVID-19. But that employer paid 20,000 in qualified wages in the second quarter of 2020. So that employer can get a credit up to 50%, which is 10,000 in employee retention credit. Now, how are you going to get the credit? Anyone would think that. You all know that as employers, you have to deposit whatever taxes you withhold from your employee's paycheck to the IRS, either monthly or bi-weekly, whatever is your cycle. So you can be and not pay to IRS. So that is how you're going to you'll be able to claim the credit. So for example, the employer is otherwise required to deposit $8,000 in the federal employment taxes for the second quarter of the wages. But as they have paid the wages, they're able to get 50% credit. So they do not have to deposit that $8,000 and can retain the whole $8,000 plus additional for 2,000. What do? They have to file this form 7200 to get the advance credit for the additional amount. So this was the employee retention credit. Now let's go to two more credits that were introduced by the Families First Coronavirus Response Act signed by President Trump on March 18th. According to this act, what if you have employees who you are paying sick leave because those employees are either unable to work because of COVID quarantine or has symptoms and seeking medical diagnosis, you pay them sick leave, you are entitled to get 100% credit for that. So for example, if you pay, you can pay up to 80 hours. That means 10 days if they work 40 hours a day. So, 40 hours a week. So 80 hours at their regular pay rate, whatever is their regular pay rate, but the maximum is $511 per day. So if you have employees who are sick or diagnosed with, are waiting for medical diagnosis and you pay them sick leave, you can get $1 for dollar credit for providing this sick leave. So this also includes the second credit, which is for the paid family leave credit. This is for those people who are caring for someone else in their family who have symptoms of COVID-19 and they have to care for them, or they have a child whose school is closed or daycare is closed and you have to take care of their child. Then also you are eligible to have 80 hours in your, you can pay them for 80 hours in the family leave and you will get the credit for that. But you have to pay them at 2/3 of their pay rate, not the regular pay rate, but 2/3 of the pay rate. And the maximum is $200 per day. So this is available to any eligible employers who are paying these kind of leaves, who are paying sick leaves and family leave to their employees between April 1st of 2020 and December 31st of 2020. So, and the qualified leave wages will include the sick leave that you're paying them, the family leave that you're paying them, plus your health expenses, the health insurance that you're paying with that. And it will also include the employer's share of the Medicare taxes on the leave. So if you're doing that, then you can get the credit. And how are you going to get the credit? That's the next question. Let's look at the example. For example, you have an employee who took sick leave due to COVID-19 symptoms of 2 weeks, and that is like 10 days. So the employee regular pay rate was $30 per hour. So you give them a paid leave of 80 hours into $30, which is a total of $2,400. So you can get the full credit for this amount. How will you get the credit? So we all know again that every employee has to pay have to pay federal tax from the wages, Social Security tax, as well as Medicare tax. And the employer also has to pay Social Security and Medicare tax. So, for example, this employee had $500 in his or her federal tax withheld. Then the Social Security and Medicare tax, which were withheld, employee as well as employer portion 15.3% of this 2,400, which is a total of 367.2. So now, in order to get the credit, you can retain all this money, $500 and 367.2. You can retain the money and not deposit it the way you have to deposit it with the IRS monthly, whatever taxes you withheld. And still the balance of 1532 is left, 1532.8, which you can claim by filing Form 7200, which is the advance of employer credit due to COVID-19. This form is available. So these were the credits which were present for the individuals and for the businesses. I hope this presentation, you were able to learn something from this and you're able to apply this to get to for your benefit. If you have any questions, you can email me on my email. And Jazakallah khair for listening. Assalamu alaikum wa rahmatullahi.
إن الله وملائكته يصلون على النبي يا أيها الذين آمنوا صلوا عليه وسلموا تسليما إن الذين يؤذون الله ورسوله لعنهم الله في الدنيا والآخرة وأعد لهم عذابا مهينا والذين يؤذون المؤمنين والمؤمنات بغير ما اكتسبوا فقد احتملوا بهتانا